On January 30th, 2026, Donald Trump formally nominated Kevin Warsh as the next Fed chair via social media, breaking a nearly 30-year tradition. Warsh did not appear alongside the president and has remained out of the public eye with no statements. This deliberate silence could be the first signal of a shift in the Fed's communication style if confirmed. It begs the market's question: is the Fed about to enter an era of surprises, where policy comes out of a blind box? For nearly 3 decades, it's been standard for a Fed chair nominee to make a public appearance and statement. When Trump nominated Jay Powell in 2017, they stood together in the White House Rose Garden, and Powell immediately pledged to be attuned to markets. Warsh's unusual silence has surprised and disappointed many economists, yet it aligns perfectly with a view he's long held. Since leaving the Fed board in 2011, Warsh has consistently criticized officials for talking too much, arguing that frequent commentary invites market misjudgment. He has stated plainly that Fed leaders should stop sharing their latest thoughts in real time, as constantly fine-tuning the message based on new data often backfires. Former Atlanta Fed President Dennis Lockhart noted that markets have long complained about the cacophony from Fed officials. Warsh's silence is likely his first step in trying to reshape central bank communication. The Fed's communication style has evolved. Warsh's stance is a call to adjust and partially revert to an older mode. Before the 1990s, central banks operated on a never explain, never excuse basis, with figures like former Bank of England Governor Montague Norman and former Fed Chair Alan Greenspan known for their cryptic remarks. Post-1994, the Fed shifted toward transparency, using policy statements and the dot plot to steer expectations, believing clear communication made policy more effective. Warsh advocates for a more restrained approach, arguing that oversharing can actually weaken monetary policy. Warsh's apparent lean toward less communication has sparked widespread speculation about his next moves. Michael Gapin, head of U.S. economics at Morgan Stanley, notes that talking less fits Warsh's view of a central bank that shouldn't micromanage markets, a model already used by the Reserve Bank of Australia and Swiss National Bank. But it also means the Fed must accept potentially higher volatility in stocks and bonds. Less guidance could let markets run on faulty assumptions, amplifying swings. Markets widely speculate Warsh may cut back on press conferences. Chair Powell holds 8 per year. Warsh's style is expected to be more streamlined and less scripted. However, Anthony Saglin-Bain, chief market strategist at Ameriprise, suggests Warsh likely won't immediately scale back the quarterly economic projections, and less talk outside of crises isn't necessarily bad for markets. After all, even with officials talking constantly, market expectations for Fed policy are often wrong. For now, Warsh could unilaterally decide the frequency and content of communication. His precise plans are unknown. But economists broadly agree the Fed is heading for a quieter, more low-profile era. This shift will inevitably have a double-edged impact. It could reduce market noise and strengthen policy resolve by avoiding whipsaw moves caused by official commentary. On the other hand, it would lower transparency, raising uncertainty, and forcing asset prices to rely more on the market's own reading of core economic data, not Fed speeches. For investors, this means the Fed could officially enter an era of policy surprises, requiring more caution in navigating volatility and a shift in focus from officials' words to the hard economic data itself. For global markets, a change in the Fed's communication paradigm could reshape how its policies are transmitted, affecting worldwide asset pricing and capital flows. The communication revolution that began with Warsh's disappearance is quietly rewriting the rules of engagement between the Fed and the market. Its full impact remains to be seen.